project finance. This is where the villain and the hero fight. A recent subject, more talked about, not yet understood. Banks are funding without understanding. People are borrowing with hope. We have yet to learn a lot. Why I say this is, in our total canvas of financial markets, perhaps these two segments are drawing much more attention, and the financial markets are much significant. They are reflected here, but the undercurrents are happening elsewhere. Unless you know the linkages that happen between them, perhaps you will not be able to understand where exactly is emanating. There are almost 20 participants in financial markets. Banks, which are well known traditionally in the financial sector, for a long time they believed their job was to accept deposits and to lend money. They were worried only about credit risk. If there is a default, still I will be able to pay my depositors. But today, credit risk has become less important and more risks have emanated into the bank's portfolio. They are doing other than credit risk. You will discover it little later. Central banks, they also not only controlling the financial sector, they became an important participant of the central bank in the capital market. The entire treasury bill and government securities are regulated by them. And more importantly, and less realized was the fact, there are huge reserves of the central banks. Don't take any notes, nothing is required, no question paper. That is the advantage of conclave. Central banks have huge billions of dollars of reserves. They are under pressure to invest and earn. Last year RBI profits have come down because something else happened somewhere. They also have to generate where these funds are to be invested. So they also become a participant of the financial market. Our Reserve Bank of India participates in the US market, in the Euro market, and put their funds. They are not very clear whether they should go to China, Japan, how to diversify. There are so many equations. For a long time, banks are controlled by central banks. So those of you who are more adventurous, who did MBAs, particularly from Harvard and Stanford, they thought we don't want to be regulated. They started investment banks. And after the Merrill Lynch failed, they are being regulated now. For a long time, they didn't enjoy any regulation. They were able to do on their own, but played a very significant role in the emergence of the financial markets and their downfall. Insurance companies, they have large surplus of funds. I think the previous speaker was mentioning one of the important problems of the banks is asset liability mismatch. They take deposits for 2-3 years or 1 year, but they have to lend for 10 or 15 years. If anything happens, they become insolvent in no time. Insurance companies, they take every day, but invest for 20 or 30 years. Only in the event of death or at maturity, they have to give the money. They don't know what to do with this money for 20 years. So they became very, very important players. First, indirect, they invest in banks, they invest in investment companies, they invest in government securities. Now they have become direct players. Mutual funds, some of them are investing as much as an average 20% of the total private equity is with mutual fund at the global level. And their funds, as you know, not only on a daily basis you liquidate, closed-end funds, open-end funds, there are a variety of creatures there to attract your investors. They are a very significant player and likely to emerge much more than even banks in years to come as the savings in financial form of the community increase. Pension funds, hedge funds, I will come to that a little later. These are also non-controlled funds. Most of them were in America and Europe. They wanted to get out of the regulations of the central bank. They promised the people, I will give you a much higher return. We did 20%, I will give you 20%. People believed in them, invested with them. And they are not under regulation. And the size of funds as of 2007, they saw only 1,000 trillion. Somebody talked about GDP. This is much more multiple of GDP. We don't know where are these assets. They have funds.